Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, May the 23rd. The year's 2019. Let's talk trading. What's on your chart? It's funny when I look at some of the charts out there and what people believe in and how they just sometimes just can't take a step back and see the fallacy. It's just really amazing to me. But one thing I think most traders can agree on is the importance of money and risk management. In fact, I guess they were talking about this one guy, Viper, who used to, I don't know what the word is, but always had something to say when I was posting over on, I think it was Elite Trader. It's like, doesn't matter, the statistics, the proof, the consistency. They just always find something to say, but, I don't even worry about those people anymore. I never should have in the first place. But, growing up on the East Coast, if somebody, pushes you, you got to push them back. And let's talk about pushbacks. Euro yen was up here just a couple of days ago. Now it's down in the lower weekly wick zone. On these gap fills, we only have two that haven't filled, and today's Thursday. So, I showed you a few of these gaps. It was a lot like these Australian pairs hadn't filled yet. And once again, this is something you can go back and look at all those, look at my Monday, Friday, or Sunday, Friday videos, and you can just see week after week how many times he's filled the gap. In fact, somebody posted a question, and I do have an indicator that shows the frequency of gap fills. Me and a fellow trader worked on it, and I guess one day I'll maybe I'll bring it up, show it maybe next week, and show you some of the statistics on one pair. And so right now you can see we're 36 pips below that weekly open. And we're red once again. Price open below the midpoint, giving a negative or a short bias. Not to mention, came in the lower wick zone of the previous day, broke out of that low, and you can see what happened to price. We're down here cutting across these wick zones, which might want to show price will reverse possibly tomorrow. And remember, we've been looking at the first day of the week, high, low, this range, and we've been taking trades out of it. And you can see here, it paid off nicely. The low was 53, all the way down to 14. That's almost a 40 pip run to the south side. And if you took that trade to the south side, you could see right here, as price didn't make a new low to here, once it scraped across this one, that's about where profit should have been taken. In other words, once it pushed down here, you could have moved your stop to there and gotten the lion's share of the trade. That's how you do those. Got a 1 ball in the bottom, 3 ball here. So look for price to move the other way, but we're still all red here, and we're still all red there. Inside bar, a thing of beauty. Once again, some people say these are deadlines. But obviously, those deadlines worked. And showing here, it's pretty much almost the exact same thing. Previous day, right through. Range 93, only 400 or better. Just, once again, anemic. And yesterday, FOMC day was really anemic. so anemic, we had an inside bar. It's almost unheard of. But we've put in a weekly H1 lowest open just a few hours ago. And anybody who took that trade is up about 20, 25 pips at the moment. Pivot point just a few pips above, so there was a small long bias, but as you can see, we never hit the buy zone. See how close it came there? It came within 5 points or half a pip. Now, would you have rushed that trade or would you have waited? Do you have the discipline to wait those last few, or you're just like, oh, I'll get in now? Well, you see what happens if you rush sometimes. You wind up getting stopped out. See, here we had 1, 2, 3, 4, 5 crosses of this weekly open. Finally to the downside. Nice rat trade for the green rats here. See, at this point in time, this was the low, so there wasn't a rat trade, but with 93 pip range, we definitely have some cheese. And we have a missed pivot. So we've added another missed pivot. Price action, we've gone over this before. 3 ball at the bottom. So in other words, price came down here between 10 and 20, closed between 20 and 30. Chances are price isn't going to close between 20 and 30. So it looks like it's going here, cut across 40. You should have at least bagged 10 pips on that trade. And here, price open between 30 and 40. Chances are it's not going to close there. Not going to stay there. Once again, you had a chance to bag at least 5 pips. Here, price entered between or open between 40 and 50. It's not going to stay in there. Dipped down, dipped up, came back in. So you can see here, it's rare for price to open and close in the same within these bars. Why? When you look at the frequency distribution, you'll see why of the range, because usually I think it's more than 10. So let's not mention that. I think I do have the frequency distribution chart up here. That's high open. Yeah, range. We're looking at H1. So you can see right here, only 32% of the time is the range less than 10. So that's basically 2 out of 3 times. That's not bad odds, right? So 2 out of 3 times. Let's see. Okay, there's one open and closed in the same one, and 1, 2. So 2 out of 3 it doesn't. So here's 1, here's 1, 2. So it's almost like if it does it, chances are it's not going to do it again, except right here it did. So open and closed 2 times within the same one 2 times in a row, but still you could have made a pip or two. That's the whole point. Find something where you can make a pip or two and then exploit it. Wick zone, small wick zone on the bottom here. In and out, in and out, in and out, in and out. It's again, previous day's low. Nothing but chop at the tick level right now. You can see here, not much is happening, just like yesterday. Might be the time of day or might be the price level, but you can see here, this is pretty stagnant. Once again, we looked at those frequency distributions. Well, let me put it back to the daily, because this is all about what's on your chart, right? And the one person that was talking about deadlines versus, live lines. Well, when you look at ATR levels, call these deadlines too if you like, but what you want to look for is you come back here. Okay, why isn't the chart flipping? Let me pause the video. Okay, back to you. So, some people could say these lines are deadlines, but they're really not, and there's a couple of reasons. Because what we do is we look at the frequency distribution of the range. So you can see here the majority of the time it's 60 or more. So if that's the case, when we look at what price does, we know if we start at the daily open and it has 60 more of range to go, then we can plot lines open plus 60, open minus 60. And what we can also do is look at the current daily high and low and plot positions 60 pips off of those. And then we pretty much can say where price is going to go and where it possibly might reverse. And so that's the whole strategy behind this. So you can see here, we got the daily open plus the ATR 3, ATR 6 giving us a zone. So over the last, 13 days, ATR 3 was the largest, ATR 6 was the smallest here. And so you can see where these lines plotted from the daily open. And so you see here, we came right down. And in this case, we went to the daily open minus the ATR 3, actually exceeded it, but then price now reversed. And you can see here we had a 93 pip range. You can see it right there easily. And for the week, 160. So once again, going back, knowing this cutoff right about here, we can see where price is usually going to be. Then we've got an average range of 77. And you can see here max range, min range. And we know how many bars are above the current range out of the last 100 bars, how many are below it. And it gives you an idea about where price can go. So somebody can call these deadlines, somebody can call them, it doesn't matter what you call them. All it matters is how you use them, right? And that's one way I use them. And for those of you who are always interested, a couple in the mother load here, we've got the range gauge, 2 instances, and the ATR lines, 2 instances. Once for the week and once for the month. So, fellow traders, as you're out there, and don't worry about what somebody else is saying about what you're doing or how you're doing it, because it's all about you. It's because it's not what you trade, it's how you trade it. So just go out there and drain the banks.